US President-elect Donald Trump has announced plans to impose 25% tariffs on all imports from Mexico and Canada when he returns to office in January. Trump blamed the neighbouring countries for not doing more to prevent the flow of migrants and drugs into the US. He also urged China to impose the death penalty for drug smugglers, threatening to hit Chinese goods with another 10% tariff. That's despite US government data showing most illegal drugs are smuggled in by Americans at legal border crossings. Trump campaigned on using heavy tariffs to boost US industries, but economists warn consumers would end up paying the price. Well, for more on this, let's speak now to Claudia Schmucker, head of the Centre for Geopolitics, Geoeconomics and Technology at the German Council on Foreign Relations. Great to have you on the show this morning. So, is this the beginning of a new trade war?
Well, we have to see whether he will actually implement the tariffs. So we know he's a tariff person and he wants to regulate all policies and all problems that we have through tariffs. And the first thing is to announce them. And then he will wait and see whether Canada and Mexico will react and maybe offer something in the areas of migration or drugs that you just mentioned. If he actually imposes these tariffs against Canada and Mexico, and on top of that against China, we will see a lot of retaliation because countries will not be willing to accept these kind of illegal tariffs, and then we will enter a trade war.
Tell us, what's the real world impact of these measures?
Well, we are an interconnected economy. We do not trade just products from one country to another, but we have global value chains and we have very interlinked trade connections. So once you impose a tariff on imports from a certain country, you will basically ruin existing value chains. And this especially holds true for Mexico and Canada, because a lot of intermediary products come to the United States. So you mentioned you will have higher prices for consumers, which is true, but you will also deeply hurt the US industry because they need these products coming from Mexico and Canada. So you will see less GDP growth in the United States. But in addition, this will also hurt other countries on a global scale, especially if we also invite China or add tariffs on China. So what we will see is a definite hit on GDP and on global trade.
So, considering what you're saying there, who then holds the power in these trade standoffs? Is it the United States?
The United States is one of the largest importing countries. They have a huge market. So a lot of countries, for example, Germany, have the US as the largest trading partners. So if the US raises tariffs, that's a real problem. I mean, they're interconnected. So if other countries retaliate, they will be hurt as well. But we need US as an economic and trading partner. So if they raise tariffs, this will have huge implications.
OK, well, there's a lot of talk about tariffs being a political move rather than an economic one. Now, you've talked about, implications of this and what could happen afterwards. Are these announcements then more about sending a message to voters than actually solving real trade issues?
Well, they will not change any problems that there are. So if he actually wants these tariffs, so countries will change their policies. We will see whether something happens on migration or drugs. I mean, you just mentioned that it's the lowest number that we see right now and that the situation has improved. But when you look at economic problems like trade balance deficits that he's actually looking at, these tariffs will not change nothing.
Right. Now, China has often been described as not having the same leverage as the US when it comes to tariffs. But is this also, as well, an opportunity for China as well?
Well, they have an interconnected global trade and they're dependent on the US market. So if United States raises tariffs against China, and I have to say that again, that's against global trade laws. Whenever he will raise these tariffs against Canada or Mexico, they are part of a free trade agreement, that's against trade laws. If he just raises tariffs against China, that's also against trade law. So China has a good chance to retaliate and increase tariffs themselves against the US. And the US is dependent on the trade with China. So they will be hurt as well once China raises the stakes.
All right, we'll leave it there. Claudia Schmucker on the German Council on Foreign Relations. Thanks for joining us today on DW.
Thank you.
Jacob Gunter is lead analyst economy at MERICS, that's the Mercator Institute for Chinese Studies. Welcome to DW. Is this a significant escalation or just another chapter in the ongoing US-China trade war?
Yeah, thanks for having me, Phil. I think it's a pretty small escalation built off of the first Trump administration. So we should remember these 10% tariffs would presumably come on top of the 25% tariffs on all Chinese imports that slowly evolved out of the trade war from the first Trump administration. And with that, a 10% increase is actually not that significant, all things considered. During the first Trump trade war, global value chains, by virtue of being global in nature, were able to adapt and find a lot of workarounds through third countries. We saw a lot of Chinese companies investing in some production in Southeast Asia, to a lesser degree Mexico. And companies were able to kind of survive those 25% tariffs through that relocation of supply chain, or by accepting, passing higher costs down to consumers, or accepting lower profit margins themselves, or kind of a combination of all of those strategies. So I think a 10% additional tariff would be more workable than I think Trump would hope for for these Chinese companies.
Right. And how is Beijing likely to push back if these tariffs are implemented?
Yeah, this is the big question, because, I mean, it's the 10% tariffs that were threatened today, but also the 60% tariffs on all imports from China that have been threatened in previous months. So I think China's in a very different situation than it was during the first Trump administration, where it sort of went tin for tat with the United States. Every time the U.S. raised the number of goods it was hitting with these 25% tariffs, China had a corresponding percentage of its imports from China, or from the U.S., that it raised its own tariffs on. That was at a time when China's economy was doing much better than it is today. China's facing a lot more economic headwinds, so it'll be under a lot more pressure to not just go tit for tat, but to think about alternative solutions. And in that sense, I could see one of two directions that China could go in. The first would be that it responds by actually not really responding directly to the U.S., but rather by drastically opening up its market, lowering tariffs unilaterally, increasing its trade with the rest of the world to try to compensate for the impact of U.S. tariffs. I think this would be a bit out of character for the current leadership, but it's theoretically possible. I think what's more likely is China probably tries to hit back harder and chooses some of the areas where it has the most leverage over the United States, such as in a lot of critical minerals and materials that the U.S. relies on for its high technology. So a lot of parts of the table of elements that we all learned about back in school, but don't think about much today, but are underlying all of our technology. The risk, of course, there is that the U.S. could replace those over time because it's not so much a technology issue the U.S. has to overcome. It's a market efficiency issue. And in the meantime, the U.S. could then escalate U.S. tech controls on China in retaliation. So these I think, are the two main paths that Xi Jinping has to choose from.
And it is all going to be quite messy. I said if these measures are in fact implemented, do you think that Trump will actually do this, or is this the opening salvo in a negotiation?
Oh, it's almost certainly an opening salvo, because even the first Trump administration's trade war with China, this was a steady escalation of tariffs, but throughout the entire process there were ongoing negotiations that eventually led to this so-called Phase 1 deal between the U.S. and China. Now, that didn't really materialize the way that the U.S. hoped it had, in large part because of the pandemic, but also for some other reasons. But basically, I think that's the story of Donald Trump. This is the art of the deal man. He wants to find a deal. He wants to find a solution. But he's going to start from a position of leverage and of strength. And I think starting off with 10% tariffs and maybe working his way up from there as negotiations go on would be his way of trying to increase pressure.
OK, thank you for talking us through that so clearly. Jacob Gunter from the Mercator Institute for China Studies.
Thank you.
Let's get more from Kate Ferguson from DW Business. Welcome to the studio, Kate. Put this announcement into context for us.
Well, we're talking about 3 countries, all of which have distinct trading relationships with the United States. But what I think is very interesting is that they all share one thing, and that is that they export a whole lot more to the United States than they import. And this is something that Donald Trump does not like. If we look at China, though, I think this is particularly interesting because he's only threatening a 10% tariff. This is far from the 60% that he was talking about during his campaign trail. Canada and Mexico are also curious because during his last term as president, Donald Trump himself negotiated a new trade deal with both Canada and Mexico. And these tariffs would go against the terms of his own agreement. So either he's planning on abandoning the existing trade deal with Mexico and Canada, or he wants to renegotiate it and is hoping to gain a little bit of leverage by doing this. But I think the headline for me is that this is a softer stance on China than he previously communicated.
And so what impact are these tariffs likely to have on US consumers and industry?
Well, generally, tariffs make things more expensive. So if we look at the kinds of imports we're talking about, the US generally gets a lot of oil from Canada, and from Mexico, it's mainly cars and car parts. So we could see vehicles and fuel getting more expensive. In the case of China, we're mainly talking about electronics and things like toys and furniture. What I should say, though, is that higher prices aren't necessarily inevitable, because what can sometimes happen is that the countries in question get so scared of the potential impact of trade breaking down that they lower their prices, or American companies themselves could choose to absorb the cost. These are less likely scenarios, but they're possible as well.
So what sort of retaliation are we likely to see?
Well, one thing China could do is to devalue its currency. And this would make Chinese exports more competitive, and it would mean that more countries would want to buy its goods. It did this previously, actually, during Trump's last term. But it's a bit risky to do this because generally a devalued currency scares investors off. And the Chinese economy at the moment is a little weak, so it may not choose to do that. In the case of Mexico and Canada, should this existing trade deal be abandoned, they're likely to impose their own tariffs on US goods. They also did this during Trump's last term. They put levies on things like whiskey and ketchup and pork, and they specifically targeted states that were very loyal to Trump. So something similar could definitely happen this time. But overall, you could see all 3 of these countries decide to look elsewhere for forging new trade ties as part of this broader breakdown of an existing global trade order.
Okay, thank you for that, Kate. Kate Ferguson from DW Business. Thank you.